Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Sean Brodrick, and we're going to be continuing to talk about the strong move in commodities, and now even more importantly, the underlying stocks taking part. Really, every stock here taking part in this rising commodities environment. Some stocks are doing better than others, but this is kind of the environment that a lot of the commodities bulls, and I know a lot of us invested in these stocks, were waiting for. Sean is the editor of Wealth Megatrends, also contributing analyst to Weiss Ratings Daily. Sean, when we look inside your portfolio, then I know you are diversified in a number of different commodities stocks, a number of different sectors. Where do you see some of the best gains coming from?
Well, gold and silver have been doing very well for our portfolios. Also, stocks for the reindustrialization of America. There are other names for that trend, but basically industrial stocks, those that are going to build factories, stuff like that. And also uranium. Uranium seems to be leading the pack lately, and it got some help from the US last week. I believe, I don't have the number in front of me, but the U.S. says it's going to spend $3.7 billion to source uranium from local sources. That means in North America. And at the same time, we have a ban being worked in against imports of Russian sourced uranium. And of course, that's not only uranium from Russia, but through neighboring countries as well, because that's how that whole market works. And so $3.7 billion isn't a lot in the scheme of things, but I believe many traders believe that's the tip of the iceberg, and there will be more to come. And so we've seen some good uranium stocks really light up. We had a bunch of uranium stocks in the resource trader portfolio anyway. I just added another one today, and I added it today because we might be having a slight pullback, which is what I'm hoping. Because, I mean, nothing moves in a straight line. You can see that in gold, for example. It hit a high a few weeks ago, pulled back, and now it's testing that high again. Everything zigzags higher. Silver's been moving the straightest line, but even it has to pause at some point. I would use a pause in any of these things to add new positions. Uranium, of course, there's one fund to hold physical uranium, but the way to really play it is with stocks that are leveraged to the underlying metal. And there are some great small uranium companies in North America that are bringing mines on this year, next year, and the year after. That's the sweet spot. Those companies that are bringing new mines online, or at least that's the sweet spot for me. Those are the ones that are moving well, and so that's how we're playing it.
Well, Sean, yeah, absolutely. The uranium stocks have sprung back to life here after correcting a little bit at the first part of this year, but they've been on a big run lately. And uranium's an interesting case in that people are worried it's going to do what lithium did and top out and then have a big price crash. Do you think there's enough fundamental drivers behind uranium that it's going to be able to sustain these moves? And for people looking at it now as a potential to get in, is there still plenty of time for them to see value accretion?
I believe so. The question is, how long can the bull market run? A lot of that depends on Kazakhstan, because at some point, I'm sure as many of your listeners know, here in the US, here in North America, we have in situ recovery mines for uranium that basically run soapy water through the rock, and so that recovers uranium. It works nicely enough, no real harm. Over in Kazakhstan, they run battery acid through the rock and does incredible environmental damage, but you get a lot of uranium. They can crank it up if they want to. It's not an immediate process, and we'd probably have some warning if they started to do that. But Kazakhstan has shown restraint. In fact, they've had problems. They've had problems sourcing the materials they need to actually run those mines the way they want to. So they've been running them under par. Now, at some point, that will be sorted out, and I expect uranium production there will increase. However, I think they're going to be smart enough to take a cue from OPEC and not overproduce. So I believe this bull market can run for quite some time, and especially here in North America, because we don't want to be dependent on uranium from Russia, uranium fuel from Russia, I should say. It's processed over there too. So because of that, we are going to look for alternatives closer to home. That's in the US, that's in Canada, that's also Australia too, but it's harder for some people in North America to actually buy uranium stocks, though in my personal portfolio, one of my best performing positions is called Boss. It's a Australian uranium company, and it does well. It's on the OTC. That's okay. It's doing just fine, and it keeps zigzagging its way higher. So I don't think people should overlook Australia as well. But we're seeing a real divide. People don't want to keep giving money to Russia and also giving them the leverage over us that they'd have if they are our major uranium supplier. And so we have to bring politics into this as well. And I believe that kind of political divide can last for a lot longer than people might think. And so that's a long-term force that you have to keep in mind.
So, Sean, when we're looking at these stocks, and again, it's a lot of different sectors, a lot of different commodity stocks that are moving higher. When you're waiting for, let's say, a pullback or a slowdown, but you have certain stocks that have completely outperformed in your portfolio, do you ride those stocks or do you rotate that money into those other stocks that you think should join in but just haven't joined in the rally yet?
I'm like one of those irritating people that will probably take gains too early. Just because, I see a big pile of money and then the stock starts to sit there for a while. And I'm thinking, I think this next one's going to take off. So I'll put the money in that. I do tend to take money too early. It makes it hard to brag about triple digit gains, though we do have some of those, just when things run the right way. So it all depends on your own trading style. But I never have a problem with actually taking a gain, usually after a run of like 30, 40, 50%, I'll grab half the position anyway. That really lowers my cost basis and stuff like that. And so it all depends on your individual trading style, but I always want to make my subscribers money. And if you're just holding stocks, that's hard to do sometimes.
Yeah, Sean, no harm in taking profits once in a while on the journey up. That's the whole point of it, is to eventually keep the money and get it out of the market before it turns back around on you. But when you look at something like the precious metals, they've been in the hurt locker for so long. Some of those gold and silver stocks, they're so beaten down. Is the danger that some people get excited on these rallies and actually sell far too early?
Oh, yeah, absolutely. And you know what? I mean, if you're just worried about just sell half or a third of it, that's all. I mean, you can take profits in thirds. You don't have to take gains all at once. And so if you just want to ease your mind, and just make sure that you've got some gains and also lower your cost basis, that's what I would recommend doing. And it's worked out very well for us. What's one I took half gains on? AEM. Agnico Eagle Mine. Look at the ride on that thing. Now, we've owned that for a while. We did really well. Took half gains. What was that? Last month, I think. And you know what? Actually, I thought that we were in a short-term top toward the end of last month, just because we had a push higher, then it reversed lower on a high volume day. But that didn't stop the dang stock, because so just goes to show you can put as much study into this stuff and it's still an art. It's not a science, because sometimes the charts tell you one thing and the stocks do another thing. So people just have to do what they're comfortable with. I never have a problem with like taking gains. I certainly understand people who hold for longer. The one thing I don't understand, and I'm seeing more and more of this on there, are people who put a big chunk of their money, like maybe 60%, 70%, 80% in one stock. That blows my mind. I can't imagine people taking that kind of risk. There is single stock risk, and that will really come around to bite you. So that's the one thing I would recommend people avoid doing. Don't bet all your money on like one number on the roulette wheel. You really need to spread that money around.
Sean, what about silver stocks too? Because look, we know that all these commodities are rising, and in all fairness, silver stocks, they can be the most leveraged to the underlying silver price, as silver can be more leveraged to gold. And silver is trading at a level that we haven't seen in over a decade. 2013 is the last time silver was up at this level. That's when it was heading back lower. You look at something like the silver stocks, even going into the junior silver miners ETF, SILJ, that's trading at levels from 2022. It's not at the higher levels that maybe we would expect. But that being said, it is up around 70% in under 3 months. Do you see opportunity in these silver stocks really starting to take off?
Yeah, I mean, there are some that have been doing extraordinarily well for us. Silvercrest, for example, Mag Silver, stuff like that. Those are two we have that are doing extraordinarily well. I haven't sold any of them just because I think silver has more to run than gold does. Silver just had its breakout, but you bring up a good point because I'm calling up a weekly chart of Silvercrest. The last time it was at this level was in April of 2022, and then it had a terrible year last year. What if we go to monthly? Well, no, we still have some ways to go to get back to the old highs. But what if I did Mag Silver? Yeah, 2021. So I wouldn't really worry about anything until we get to those 2021 peaks. The environment is more bullish for silver and these stocks than at any time in recent memory. And I'm an old dude. I remember how bullish things were, but I think things look extraordinary for them right now. So set your eyes on the 2021 highs as a place where you might want to consider taking some gains. But what I'm doing is I'm not going to take any gains until we get to those highs, and then I'll consider it. But I might not, because as you know, gold can run, but when silver runs, it sprints. It just takes off. And so you want to be on board for that. You have to be in it to win it, and you can certainly win it with silver.
Well, and Sean, with silver, it is so speculative and it does move so much so fast that often people are stuck either in big downdrafts where it moves to the downside faster than they're expecting, or it shoots up to the upside faster than they can get positioned. If you think back to some prior peaks, though, like something like the 2020, 2021 coming out of the pandemic, it was very short-lived. Same thing with 2016. That was an exciting period, but it really only went 8 months from January to August. So it was very short. This time we're seeing silver break out where gold has made new all-time highs and where silver is back above 30, 31, 32 at the time of this recording. So do you think there's a chance we start seeing moves like we did from, let's say, coming out of the great financial crisis from 2009 to 2011? Could we see those kind of highs again, or should people still be more guarded on the way up?
Well, as Yogi Berra said, it's hard to make predictions, especially about the future. But I don't think we're in a 2021 situation here. This looks more like great financial crisis, stuff like that. There are big forces going on in the precious metals market. One, we were having a chat just before we came on. China is openly talking about devaluing its currency. That has sparked a rush for gold in that country, which has a knock-on effect. The dominoes continue on around the world when China is so hungry for gold. Silver, it has its own forces, and it is a precious metal. It's also an industrial metal. But look at copper. We're seeing industrial activity pick up enormously, especially stuff related to energy and new energy vehicles and stuff like that. And like silver's used in all sorts of stuff related to that. So I do believe this is not the same as the last brief run we had. It's a much longer run. In the long term, we'll have to see how things go, but I feel very confident about precious metals now. I mean, early last year, I made a forecast using charts for gold to go over $2,900. I think I'd have to go look it up. My price target is 2,941. That's all based on charts. And so a lot of people will shrug and say, yeah, charts, that's not fundamentals. And I understand that point of view completely. But technical analysts are watching these numbers. And so I'm expecting gold to run this year over 2,900, and it could go higher. But there are big major forces at play here. And I just want to bring this back to the point. As bullish as I am on gold, I'm more bullish on silver, but I'm even more bullish on uranium. And the uranium price hasn't moved all month. Around March 1st, I think it was, it hit, $92, and it's still, I think it's trading between 90 and 92 right now, but you can see the change in the uranium stocks themselves. They're moving in advance of the metal. People can see tremendous orders, institutional orders coming down the pike. And once you build these nuclear power plants, you have to feed them. So we aren't talking about jewelry shoppers. We aren't talking about people stacking it away in their basement. At least I hope not, thank God. But the forces in uranium are tremendous. So people have to keep that in mind as well. And there's so few of them, so few uranium stocks right now. Now, you might remember the last big uranium rush we had. I knew we were at a top when a company that was a gold company the week before suddenly repurposed itself as a uranium company without even hiring a new geologist. I saw that happen more than once, and that was kind of toppy behavior. We haven't seen anything like that. This thing has a much longer way to run.
So, Sean, I do just want to ask you a follow-up on silver stocks then, grouping them into three categories. One being miners, and I'm going to leave out some of the larger miners. There aren't tons of silver-focused large miners, but there are quite a few smaller scale silver miners that generally have higher costs, but with the higher silver price, these miners seem like they should be making money now. So that's a big corner for them to turn. There's also a number of silver development plays that could be brought into production. They have assets, but again, that comes down to a funding question. And then all the explorers out there, which we know there's a lot of explorers in almost every commodity sector. Where are you focused? Where do you see the potential best upside just out of that group of silver stocks?
Well, of those, I like the small miners first and the developers second. The small miners because they've proven they can actually make the mine work, and the developers because they actually have a plan and pricing and like stuff like that. What both of those need is exploration upside. They have to be working the drill bit out beyond the mine that they already have and coming up with some good results because you're right. There aren't a lot of big silver miners, but there could be. Someone could consolidate a bunch of these things, and they're dirt cheap now. They are so cheap compared to what they should be. So I think at some point somebody's going to go bargain shopping and maybe put together a nice big silver company, you know? And now we have seen it on some scale. For example, First Majestics bought one mine after another down in Mexico, but that's in Mexico. You know, there's a lot of silver potential in Nevada, parts of Canada, stuff like that. You could definitely put together a larger silver company from the smaller players out there. And so I think that's the kind of future that I'm looking for is that somebody's going to scoop these things up. They just have to have, well, it is best if they have production now with more exploration upside, or else they have developed a mine plan that's actually going to bring them in and they have a lot more exploration upside because anybody who buys those mines is going to be buying the future, not what they're producing now, but what they will be able to produce in the future. And there's a lot more to it, you know. I mean, I don't want to go on about all this stuff. It's a very exciting space, and I definitely think people should be looking at that right now.
Well, Sean, also with the silver miners, a lot of the, let's say the mid-cap companies and some of the leadership and the producers, they actually have just as much exposure to gold now as they do silver. They've
Yes.
diversified. So it's very hard to find true silver companies. You did mention Mag Silver and Silvercrest. They actually have a lot of pure silver exposure. But when you get down into the development companies and even the exploration companies, a lot of them are zinc and lead companies and some copper parading around as a silver company. How do you parse all that out?
You know, it's hard. It really, really is. And I would just say pay attention to what management says, what they want to do. You know, I mean, are they willing to drill for anything? Are they making deals? What are they exploring for? That might give you a guidepost to the future. But as you say, it's very difficult. This is one reason why I'm not looking at explorers now, because explorers tend to be so overly optimistic. They have to be, or they wouldn't be in the exploration business. And I'm not saying they're lying at all. No, of course they aren't. But what they are is they're really, really optimistic about what they can do. And at this stage of the market, I believe you're better served investing in the actual miners and in those developers that have a plan and are actually proceeding with it. Funding is tougher now than it used to be, but you know what? It's going to get easier. It is going to get easier as the price of these metals go higher. Funding will come. I can definitely see that coming too.
Yeah, the financing window is open right now. However, cost of capital is still generally expensive. Sean, how do you go about analyzing production stories then when you're looking at the financial statements? I love going through financials, but my background's as an accountant. So I really enjoy diving into the numbers and trying to find some of the nuances of where the company could pick up different, I guess, benefits in terms of higher metals prices or even some sort of synergies. But what are the key aspects that you look for in financials? I'm assuming on the income statement, but we can look across the board.
Yeah, well, the income statement is a good place to start. Have they met their goals? Did they actually produce whatever metal they're producing at the price they said they were going to produce it? And I'm talking about all-in sustaining costs, but as you and I know, all-in sustaining costs isn't really all costs. But you can still get a general idea of like how they're doing. Are they able to control costs? Are they, say, maybe doing more automation to lower costs? There's a lot of that going on now, or else doing new programs, new systems to try and keep their costs under control. You can't really lower costs unless you bring a new project online that's rich and so has more production. For I Am Gold, for example, they just brought a new mine online, nice gold mine up in Canada, and it's so rich and going to produce so much. This company was really kind of a marginal price producer. You know, they didn't have much wiggle room between what they produced at and the actual price of gold itself. But with the new mine, they get a lot more breathing room. And it's just started, you know, but toward the second half of the year, I think that's going to look very, very good. And so, yeah, look at have they achieved their goals? What are their plans? And if they have positive surprises, that's good because you like people that are conservative in their estimations because they're likely to keep surprising you and the market likes that. If quarter after quarter they have some kind of bad surprise, you know, and everybody has problems at some point. There's no mine that operates perfectly, but some people seem to consistently disappoint us. You and I can probably name a couple of those, but we won't right now. But if you consistently disappoint, then I'm really not interested in you, even if I like the management, you know, because I don't know what's wrong, but there's something wrong. You can tell because you never hit your numbers. And that I think is an important thing to look at.
All right, Sean. Always interesting chatting with you. Look, there's a lot of opportunities in this sector right now with these rising metals prices and these stocks, especially the precious metals stocks that have lagged the rise in gold and silver. Copper stocks have done pretty well, but at least now we're starting to see some money filter into the smaller ones. And uranium stocks, well, those have been ripping, and those have been kind of the bright light for commodities investors, at least in the equity side of things. So everything seems to be lining up for a lot of these commodity stocks. Let's hope that momentum continues, and sounds like very much a bull market playbook by which you are trading on. Sean, thank you so much for your time. We'll chat again in another couple weeks. I always appreciate the updates.
Thanks.